Good morning, guys. Monday morning. I'm going to get into these stock charts. We got a couple trade ideas that are starting to play out, and we'll cover those, and then we'll look at a few more things. I don't want to get in too much depth into the stock market indices this morning. There's only a few hours in the day. We're kind of bouncing around a little bit, so we'll go ahead and point out these trade ideas. Again, if you guys are new or if you've been with me for a while and you find some value in the content, drop that thumbs up. I do appreciate that. Helps the channel grow. That's kind of the goal here. And let's get right into it. Stock charts, DKNY, DraftKings. All right, so this one last week was really just on a kind of an auto bid higher, but it wasn't really moving around. It was really just grinding below this trend line. So I just plug this one right here, but here's how I had it last week. And we basically we kept just kind of pulling back barely and then just popping right up to resistance, pulling back, popping up. We're starting to see a breakdown and a resolution to the downside. So you can see the move today down 7.5%. I suspect this is going to accelerate. I see some support right here at 55.60. We hit that right here. It held as resistance, and then it marked it again as support. So we'll say 55. It's about 55.70 actually. Excuse me. So I suspect we're going to get down there today. If not today, maybe tomorrow. But I suspect it'll be today, just with the velocity of the move down so far today. Now, what does that mean for the bigger picture? Well, on the hourly chart and on the daily, let's flip over to the daily here. You can see we've had negative divergence on the RSI right here on the daily for a while now. So we made the peak right here, which put in the first peak on the RSI, and then you made a higher peak, putting in a lower peak here on the RSI, creating that negative divergence. And this is starting to turn down as well. So it's been forecasted that this is going to roll over. This momentum up is dying or fading, and it's going to roll over. And that is what we are now seeing. This thing hasn't really had negative divergence, for a while. If I look at it, the last time this really had negative divergence was really right back here. You can see here where we made, on the daily at least, we made it right there. There's your high. And then we made a slight higher high on price right there. So there was your high with the high peak. There's your divergent high right there with a lower peak. And then that was followed by a sell-off from the high to the low. That sell-off was about 45%. So, yeah, we're looking for something like that. Possibly a move down. A move down to this former support right down here at 43.55. Let's see how far down that is. That is about 25%. So I think that's a nice clean target, profit target. We break this near-term support right here at 55.70. We should come down to this 43. It's about $44. Again, I always like to step in a little bit early and take profit when I get towards my target levels. But that would be a clean first target, and then I'll have to tighten it up and find out some more targets. But that is that trade idea. So negative divergence is starting to play a factor, and we are starting to see this thing roll over. Let's watch for continued weakness. PHM. I didn't talk about this one too much last week. I did bring it up in a couple videos. This one just kept doing the same thing basically. All right, so here's the trend line that I've had on the hourly. You can see going back really to April. So we've been walking up this trend line here. I marked this one down here just to mark it out, but we're going to take that down for now. And so here's the trend line. Been walking up this trend line really all year, since April at least. And then we started to break it, and we did finally break it right here. So we broke it. We broke down right there, did a back test, and then impulsively broke down. And then all we've been doing ever since, and this is why I like this for a short is the fact that we broke the major trend and all we've been doing is back testing. So each back test level has been objective areas to add to a short. So here was your first one. You could add there. You could obviously add on the breakdown, add on the back test. And today we got another back test just this morning. We gapped up right at resistance, right around 48. As I zoom in, you can see right there we gapped up and instantly sold off. So nice clean rejection of resistance. Now we look for some momentum to really start to pick up to the downside. We do have negative divergence. It's been there for a while, and you can see here also on the daily, nice clean negative divergence on the daily, where we've been working our way lower in the momentum indicators, the PPO and the RSI, and price has made slightly higher highs. And today, let's see if today was actually a divergent high. It was. Interesting. So you can see here, the negative divergence has been intact, really back since this peak right here. And then we made a slightly higher price with lower momentum peak right there. And then you can see, so we have a negative divergence now intact right here. And then as it came back up today, it made a slightly higher price, again, marginally higher right there at the open. 48.30 was a new higher price. It was above this previous peak on a divergent, on a lower peak in the momentum. So each higher price has been very marginal and has been on less and less momentum. That is negative divergence, and that tells me that we're going to roll over. So I'm looking for this. Again, I pointed this out since I entered the trade. I'm still in the trade. And the first target is this 39.68. That's going to be a gap fill right here. So I think we come down. I think we're going to do that in relatively short order. And from where we're at now, that's a 15% gain. So we'll look at that for the short term. We also have, there's some gaps right in here in this big plunge, but we did fill those on this when we were moving higher. So for now, I'm going to look at this one. We should get a reaction there. So that might be an opportunity to, cover some shorts, let this thing bounce up and then recycle back in short again. So I'll tighten. I'll take some more time to look at it to see where we got some more targets down below. But for right now, we're going to just leave it at that single target. Right around, it really falls right around 39.72. So call it $40. Okay, so I'm just going to continue cycling through some of these trade ideas that I've put out there over the last week and a half. I really started honing in on these ideas, and so I want to follow up on those. Here's Philip Morris PM. All right, so what did I like about this one? There's a lot to like about this one. Back when we spotted this divergence. So here's what we had. We had a series of kind of falling down channels. We had, let's see if this actually, no, it didn't actually get there. We had this bearish or a bullish falling wedge, broke to the upside, back tested once, and made a new marginal low, and we're starting to work our way higher. What did I really see though? Well, a couple things. One, we put in bullish divergence. That was really put in right here on the hourly chart because you can see, if I scroll out, we made a low price right here, made a lower low with higher momentum there. You can see on the RSI, this low price was higher than the previous low on the momentum indicator on the RSI. And then again, right here, this low right in here on the second put in a new higher low on the momentum. So momentum was moving up the entire time as price was moving down. That is bullish divergence telling you that, okay, this is probably going to go higher, and we wait for some sort of a signal. And then you had this little trend line. We broke to the upside right here. Nice impulsive break. That's a pretty clean signal that this is now starting a trend to the upside. Last week, after we had the breakout, we started to flag out. I marked the flag. I haven't moved this. We marked the flag, and now we're starting to continue that break. So where's this going? Well, you can see we've got some gaps right there. So that's probably a near-term target. And then I've got one up here as well. So I'm looking at 76.22, probably get a little bit of a reaction there. And that would also line up with this measured target, I think, right about there, pretty close of that bull flag. We can take that away. We don't even need the flag anymore. And so, 76.22 right in there, and we break above that. We've got another level at 77.50, and we break above that. Well, we've got some bigger levels up ahead. So, there's some levels way up here at 90 bucks. We'll just watch this as it continues to run. The other thing that I liked about this is it was in a longer term downtrend right here. You can see this downward channel, price channel that we've been in. And we broke to the upside once. That was a bull trap. And then we broke to the upside twice. And now we're coming, we came right down into support. So we had bullish divergence at support, at longer term support. Everything was signaling that we were going to get, a bounce from those levels. And we are getting that bounce now. So this will continue to let this, run up and at least hit these profit targets and possibly a lot more. All right, Tesla. This one's a potentially great short. It's setting up. It's not, we have the setup, I guess, is what I would say is. So here's what we have on the daily chart. And when I look at a daily, I'm looking at longer term trends. Daily charts are bigger charts. They signal that you're not going to get just a couple hour breakdown or a 1 or 2 breakdown. You're usually going to get weeks to months worth of a trend change. So on the daily here, negative divergence on the PPO and the RSI. Let's see here. Did it? Yeah, it's still negative divergence. It's an equal peak here on the RSI. I'll show you what I mean. So here's price. We had a price here. Here's kind of your last peak. You made a peak in the PPO and the RSI. Then you came back and made a higher peak in price, and yet the PPO made a lower peak here. This is kind of a lower peak. And the RSI really made an equal peak to the previous high. So that's still negative divergence. And then recently, we've just been kind of grinding around this trend line that we have. So we have negative divergence. That's part of the setup. And then the other thing you want to look for is a trend line break. And I see this trend line right here. I've got it marked in red, really going back to March. And you can see we had a reaction here. Each reaction was, we had an impulsive break, an impulsive lift off of that reaction on the trend line. So we tagged the trend line here, ripped higher, tagged the trend line again right here, ripped higher, tagged the trend line again right here, ripped higher. Now we tagged it and just been muddling around, grinding around the trend line. There's no lift. It's just, yeah, it's moving higher, but you can tell it's losing momentum basically because the buyers aren't stepping in, furiously and just buying this thing, ripping it higher. There's some sellers here basically is what this is showing, that there are still buyers, but there's sellers starting to creep in. And we broke trend last week, so here's a breakdown of that trend line. So looking for kind of an impulsive breakdown, some sort of big impulsive candle, red candle to the downside to set this thing in motion. Targets for right now are down here at, we got a couple of them, but we basically have 250. I know I probably change by pennies every day, but about 254.30, 244.64, and then probably another one down here at 225.07. I think that 225.07 is likely to be hit. Probably get some sort of intraday drop into it. That might be a great spot to cover, at least in the short term. So, watch Tesla to continue to reject this trend line. We could back test it a little bit, but what I would want to see to confirm that we've really broken trend is a nice red candle down, and then you could come in for a back test. But those areas are objective areas to add to short positions. If we just grind around here and kind of work our way higher, we could recover this trend line. So watch for that. I think Zoom is setting up for a move to the downside. No trigger yet, but something that I like about this one is Negative divergence, again, on the daily chart. Nice, clean negative divergence. You can see we're making a high in price, a higher high in price up in this area, and lower momentum, lower peaks here on both the PPO and the RSI. And you can see we're really, there's some sellers here. Either nice big reversal candle, kind of tail doji right there. You can see these tails are starting to pop up where the sellers are stepping in. So this is, the momentum is, you can see it in the price is starting to fade. What I'm looking for is some sort of a break in trendline support. I'd say near term, if you go to the hourly, might be worth, at least in my opinion, taking a shot at a break of this down at 463.50, we'll call it. Hourly close below that. And that should set in motion a move down to the trend line, which is down here around 425. And I think we'll probably break that. So it might be a good kind of get a jump on it, an entry down at this 463, closing below that, of course, on an hourly close. A move down to the trend line from there is about 8%. And then I think we probably break down back within the major trend line. You can see here's the lower end of the trend line, the price channel on Zoom. We've tagged it several times. Here's a reaction. There's another, and then there's another right there. So I think if we break up here, that probably will give us enough momentum to come down and tag the bottom of the trend line. And from where we're at now, that is a good 28%. I think that's that looks pretty good. So I'm going to look for that one as a possible short and looking for the entry. We don't have it yet. I need to see that hourly close below. But we do have negative divergence telling us that it's coming soon. All right, let's look at the markets and then I'll wrap up. And, I might put out another video towards the end of the day as well. All right, so the move today, they keep trying to tell us it's a headline based on Trump's his health with the pandemic, but it's not. Clearly, it's people. That's not what the market's trading off of. What the market's trading off of right now is stimulus, and that's really what the market's been trading off of. At least since 2018, the market's been trading off of stimulus. That's why gold front ran the Fed in 2018. Gold started to break out and made a new bull market, and it was all based off the Fed. And again, most of this, the price action that we're seeing today is based on the market doesn't care if Trump is healthy or sick ultimately. They might in terms of tax implications, but for the most part, they're looking just for more stimulus. They want more and more stimulus, just continued stimulus. As long as it's there, the market will continue to hold up, and when it fades, then the market's going to have a bad day. So that's why the dollar's selling off. The dollar's not selling off because all of a sudden Trump's getting healthier. I don't know what the status is on that. I don't really care either. But the point is that the stimulus is potentially coming, or I don't even know what the status of the stimulus is. But the reality is dollar's getting soft. That's what the market's saying is we're going to get stimulus. You can see gold here, gold breaking higher. All right, so what does that mean for gold? Well, I was expecting the 1790, and I we have the top of this flag up here. We haven't really. Let's see if we got the widest part of the wedge. Yeah, we haven't got there yet on the projected target. So I think we're still going lower, although getting a slight move higher today, above. What I saw is some resistance right here at 1906. We're kind of above it a little bit. If I look at the daily here, yeah, we'll see how the day closes. They could sell this off. They could just pop it above and still sell it off below this 1906 area. We'll see how the day closes on this one. I don't see anything today that tells me that gold is all of a sudden going to break higher. And if anything, it just looks like it's kind of flagging a little bit, and then we're going to get a big impulsive candle down one of these days. Dollar, the dollar is breaking this support. We'll see how this closes as well. I still am expecting this 95.50 in the dollar. And yeah, I'm looking for the dollar to go lower. I think 95. I think a back test of 95.50. I'd like to see that before the dollar moves lower. It doesn't mean it's going to, but it would make sense that we're going to do a back test of that big old trend line that's been there for many years. Going on 10 years. To break a trend line of 10 years and just collapse, usually isn't going to happen. You're going to break it, and we consolidated, started to move higher. I think we're going to move higher and tag it. All right, here's the cues. All right, I'm only really watching one level right now, and that is this level right here. If I go to the daily, you can see this level on the cues, 280.40. A break and close on the daily above that, to me, that's pretty bullish, and I think that will set this thing in motion for a full back test of this green trend line up here. And that is the trend line that was broken. So we've still broken trend, but we can do a back test. And again, it would be very common to see a full back test. So I don't know if there's going to be a back test of this green trend line. And I think any back test to that trend line would be a very nice area to enter a short. But it's possible that we get that back test. I don't want to ride this thing short all the way up to a back test. I'd rather just enter a short up in this area. So I'm looking for a daily close above 280, 280.50, well, 280.40 basically. Right, not just slightly above it. I want to see a nice solid close above it. And that will, we had this bull trap right up in here that I said, and it played out. We did get the breakdown, but if we come back up into this area and can close, that shows a lot of strength, and I think we're going to do a back test. So that's what I'm looking for on there. If we can't and we just start to roll over, then it still looks good to the downside. One thing that gives me pause that we're going to continue to go higher is I'm still seeing not a lot of selling in the VIX. There's still relative strength in the VIX. This UVXY, yeah, it's down 2.5%, slightly falling, but that's not that much in terms of what this thing can do and where the Qs and the SPY are at today. So to see this thing kind of down only 2.5%, and the Qs is up 1.5%, SPY's up 1.5% roughly, that is something to take note of. So still holding up. We're just kind of consolidating sideways. Obviously, we could break down and have a big move down and tag the bottom of this trend line down here, or we could break higher. So as of right now, I'm leaning. If I had to pick one way or the other, I would say Qs and SPY are going to go lower, and volatility is going to go higher. That's what I see in the charts as of right now. Of course, that could change in the today or the next few days, but as of right now, that's what I see. IWM coming up towards the top of its range here, not there yet, but 159 is about 159 is resistance. If we get up there, we'll see what happens, but that could be an objective area to take a short position. It's worked many times in the past. You can see every time you took it here, it worked there, worked there, worked there, worked there. Broke above marginally, and it, then huge sell-off. It worked there. So it's been a big sideways range. Oh, and it even goes all the way back here where, it worked there and it worked there. So lots of times it's actually worked if you took that position short, and a couple times it would have shaken you out probably right there and right there. So twice you would have been shaken out, but you would have been rewarded about 7 or 8 times. So coming back into that pretty soon. I'm not sure we'll get there. They might step in early, but just because everybody sees that level. XLF having a nice day today, up 1.7%. I think this is where it's going to fail, though. And here's your gap right here on XLF. I'm looking at the hourly chart. You get a gap here at 24.66. We've gap filled now. We overshot it just briefly, and I think they fade it. I think it comes back in and fades and probably closes below that gap of 24.66. today. So I'd look for a close below that to confirm. Here's the daily. You can see uptrend right here. We broke the uptrend, back tested a little bit, and then really started to roll over, coming back in to fill the gap that was made. They could pop it a little bit higher, but I don't expect it to go much higher than where it's at. It could go slightly higher than 24.77, but I really do think the sellers are going to step in here and start to push this thing down. This has been in a downtrend really since it broke the trend support right here on this uptrend. We've been making lower lows and lower highs, so this would be the area where, you know, if they pop it just briefly, that will be a lower high, and then if it rolls over, it will continue the downtrend. And I do need to point this one out as well, and we'll wrap the video here at Redfin. So I drew this short-term uptrend line on the hourly chart, and I said, okay, the way that maybe to play this, in my opinion, is that if it breaks this trend line, then that should set in motion a move down to the more major trend line down around 45 bucks. From where we're at now, that is a good 13% drop. So rolling out, you can see here's a more major trend line. We've had several reactions. So I think, and we've now broken that trend line up here. So I think it's good. It looks good for a move down to this $45 range. And then we'll have to watch what we have going on. Also, let's see here on the daily. You can see negative divergence right here on the RSI. So we've been making higher peaks, just marginally higher. And that's usually what you want to see. That's one tell that that divergence is actually working, is when you make a new high, you don't want to see it explode higher. You want to see just kind of a marginal new high typically. And it's all relative to the stock. You know, a marginal high for each stock is different. But you can see we made a lower momentum indicator, lower peak on the RSI, and a marginal new high price, closing price on the on price. So negative divergence. So what I'm looking for? Well, looking for a move back down to the more stable support, kind of the longer term support, and then really a break. Here's your uptrend basically from the March lows. We broke that and then just created this kind of sideways channel now. So looking for this one to break this, and look at the angle of approach. You know, you can see here from March, this thing's just been exploding higher on a really steep ascent. And then once it broke trend right there, it just created a secondary trend line, but the angle of approach is just really weak. It's a really weak, you know, bid. So I think this thing probably rolls over. Shows it in the RSIs, looking for, you know, so what I'm looking for it to move down to here, and then from that trend line, you know, we'll watch that and we'll look for a break of that trend line. A break of that trend line should set in motion this thing to aggressively move to the downside. That's all I got, guys. 28 minutes, early morning video. So I'm going to get this one out. Thank you. Catch you on the next one.